The next type of transaction that we are going to be talking about is transport by road or rail. So on a road or on a train. Now, if goods are transported by road or rail, there's a standard VAT supply, so it means VAT will be calculated at 15%. If you transport fare-paying passengers via road or rail, then it will be exempt. So what does this mean? This means if you climb into a taxi, the taxi driver cannot charge you VAT, it is exempt. If you climb onto a train, they can't charge you VAT for the ticket. As long as you are paying, it's exempt. Now importantly guys, it is if you are paying, fare-paying passengers. If you are not paying, it is standard VAT. Now what does this mean? This means, let's say for example, there is a company called Bus Limited that transports people. It has a bunch of buses, it sells tickets and it transports people. That will be exempt, right? Because it's fare-paying passengers. But let's say Coca-Cola. So what does Coca-Cola do? Coca-Cola makes Coke. If Coca-Cola buys a bus, and it buys the bus so that it can transport its employees to and from work to their home, so it's a free service, but they do not charge them, then they can claim the input VAT on that bus because it's not an exempt service they're doing. So understand the difference here. Bus Limited, if Bus Limited goes and buys this bus, they are going to be charging people, so it's exempt. So it's completely exempt for them. They can't claim the input VAT because they've got an exempt business. Coca-Cola does not have an exempt transport business, so they can claim the VAT. Please also note, section 12G, which is this section, excludes game viewing vehicles. Now game viewing vehicle, obviously guys, is where people get in a vehicle and you take them out for safari. Those ones, even if you are paying, fare-paying passengers, it will be subject to VAT. It is not exempt, so it will be subject to VAT. So if you go to the Kruger National Park and you go on a game drive, they will charge you VAT. Next up, transports by flight or boat. Now what I want you to see is, this is now where people are going to go and travel internationally. So, if there's transport by a flight or boat of goods or passengers internationally, it is zero rated. Make sure you see it's not exempt, it's zero rated. So it means it is a taxable supply. VAT is just calculated at 0%. Remember to look at the lecture example. So for example, if I fly from Johannesburg to New York, that will be zero rated. Alright, if you transport goods or passengers within South Africa, it's standard VAT. Okay, so what does that mean? Let's say I fly from Johannesburg to Cape Town, there will be VAT at 15% on that. Why? Because we're not exporting the people. What if it is transport in South Africa as part of an international flight? Now what that means is, let's say I am situated in Cape Town and I want to fly to New York. So I get on an airplane in Cape Town, but this airplane first has to stop over in Johannesburg and then it continues on to New York. Now you can see this part from Cape Town to Johannesburg is within South Africa. So is it standard rate? No. Basically what they say is, they say if this is all part of one big flight, which it is, from Cape Town to New York, this is just this local stopover, and it's on the same plane, this whole thing will be zero rated. So you don't get charged for the portion between Cape Town and Johannesburg, but it must be part of one flight. You can't climb onto a Kalula plane here in Johannesburg, climb off and get into an SAA plane and fly a different one. That is wrong. Then it will be charged. And the insurance on these guys, if you fly internationally like we just saw, the insurance on that will also be zero rated.